Right, the week that was. I'm going to start somewhere we don't normally start, the NASDAQ. Here we go, as I normally do, just clearing out the charts for our first impressions, like at the end of every week. You know, the NASDAQ, you know, um, the first impressions there are these two, right? Big long-term break, but good long-term support that it has come off from. Having said that, the next impression is this is looking quite sad in the way it has continually unfolded lower, and to me the trajectory looks somewhere down there, right? And a few key levels in here. This one, where it stepped back off, and this one here, where it did a similar maneuver. To me, it looks like it's really going to head here, and it is definitely trending down. That's the way I see that. Whereas the Dow, it is, to me, just the immediate takeaway from the Dow is it's in a sideward range. It's just trending sideways. That's it. And of course, that then feeds into what we're seeing in the S&P naturally, and they are the two forces that are really dictating what we're seeing here. Where of course we've got a great trend which has been broken, and this one of course goes way back to when Moses was a child, and we see that trend which is broken. The trend is going down. We're seeing a very big support level here around about 4200-ish, give or take a bit, 4250 in the futures. We're seeing a gap that is looking like it is dying to be filled right in here, which to me is looking like it would be a technical analyst's dream, because it is right on right on that 23 retracement, around about that 4,000 level. And to me, it is certainly closing at some pretty key levels right at the minute. If we just zoom down to 4 hours, which is what I like to look at my trading off, we can see this level here around 43.77. Here it is, 43.80-ish, where there's been resistance, support, bit of a tough time, and it's broken above it and could be coming back to test it. And when we say to test it, it literally is to test it, like it'll pass or fail, right? But what it is, you want to watch those results. Now, it hasn't broken through really this down trend that it's in. This level here, 44.80, massive test. Smaller test around here, which it failed at 44.27. A lot of noise here, a lot of argy-bargy there, came off it, right? So it is still looking like it has potential to go down, and with the NASDAQ doing what it's doing, looking to me pretty lame, and the Dow treading water, that doesn't spell good news for the S&P. There is, of course, a lot of work to be done here around this 4240 to 4280 level, and you can see really here there has been, it had a little bit of go of filling in there, but there's still a bit of a gap here, which it hasn't completely closed. I guess you could say it has, but to me that 4280 to 4240 level, that's a key test for it if this fails. At the moment it's looking like it will, but no doubt there is a lot of work to be done here. There was a lot of enthusiasm there. Now, one of the reasons why, there's a whole lot of reasons to look at the futures, not just the cash market, The futures trades 24 hours a day. The cash is like a third of that. So why you would, if you're in the markets, why you're only looking at a third of what's going on is beyond me, right? But you can see here, this is the cash market, right? So there are some clear levels here, like in the cash market, but they're not nowhere near as clear as in the futures. Like it's a very clear one there. There's some chopping around here, but it looks a little bit indecisive, right? You know, I guess, you know, there is one here, right? But when you go to the futures, you just see the actual colour and the toing and froing, and these levels come out a lot more clearly. So look at that zone there, right? You can see there's a lot more work being done in there in the futures market, 24 hours a day than just 6, 7, 8 hours a day. So that's another reason why you need to look at the futures and why the futures is the real market, because it combines both the cash market and the other 18 hours of the day. When we look at the Aussie market, similar thing in a lot of ways. I guess it's just, it does correlate pretty closely with the US markets. You can see the trend's broken there. We've got massive level here of support and resistance around 73.50, and this level here, this 7100 level, goes way back to the previous high. So that is a key one. If it breaks there, then really there's a stop in here. There's a massive one down here. Right, I don't expect to get to there, but stranger things have happened. But certainly there is going to be a lot of argy-bargy around this level, this 7100, and that's why, you know, between 7100 and 7300 it's been quite an arm wrestle. I'm still short the Aussie market, short the SPY, that's S&P, sorry, and have got some stops not too far away, because you can see that when you look at the trends in these markets, these little, from the correction, we are sitting right on it. Right? We're sitting right on the trend, then we're sitting right on this line of where the previous resistance has been. Stops up here. Okay, so for the Aussie, still short, got a stop like 50 points higher. So if we just do a quick recap of the S&P for those similar levels, you can see where it is really right on those. It's been right on those. We kind of wash out a bit of that noise there. We are somewhere around, you know, these kind of key levels, wherever you want to draw it. It is certainly at a key level. It didn't break above here very long. It's rejected that 44.20, which is quite important. I expect to do some work here around 43.76. If it breaks this one, then we are looking for a retest here. Now, if it goes above it, obviously this is where the stop is 44.80. If it's above there, then the bulls are back in business. Let's look at the currency quickly, the Aussie dollar. The Aussie dollar's been a bit, it's just been a bit lame-assing around, you know, and it is, you know, sitting right on these trend lines, similar to the equity markets, you know, risk on, risk off, right? The Aussie's risk, you know, risk currency, so that's to be expected. But it is sticking with this, you know, with the plan, which we've seen in, I'll show you in the bonds in a moment, where it, you know, hits a level, comes back and tests it. You know, we can see it like all throughout here, right? Hits a level, comes back through and back tests it. You know, hits a level here, comes back through, back tests it. Hits a level here, comes back through, certainly back tested both of those. Here, hits a level, goes through, back tests it, right? So there's a lot of overlapping waves in there. The next one I would expect would be down here, and down at 71, and then if we scroll back a little bit further, we're certainly seeing a big one here, just on the 70-cent mark, where I still think there's, certainly if the equity weakness continues, then we're going there without a doubt. That's the Aussie market. We'll look at the 10-year bond yields. This is the Aussie 10-year. That's what I trade, right? But it does correlate very strongly with the US long-term yields. There's a bit of a spread between there which you can trade. You know, we can see here this pattern which we've seen in gold. I'll show you one in Bitcoin as well that's done the same thing, where it broke down, came back to recover. This price action here, I mean, that's those yields, that's really what's behind what's going on in the NASDAQ. But when we look at these yields going back, back to the GFC, we can see that, right? So we are sitting right on, you know, that line those up. We're sitting right on, right, that level. You know, you could even finesse it like a little bit further, so it's bang on those ones. If it breaks through here, then we are looking at, again, a good move up to 185. So that's only 20 points away. If it breaks there, you know, then we're kind of looking somewhere around here. The way these things ratchet, like 280, 100 and something points up. When you look at the way in which these things have ratcheted around, you know, that's kind of what the bond markets, you know, do. You know, they go down and they recalibrate, and they come back and have another go. You can see it like time and time again, right? Where it hit this low, came back, recalibrated, and then broke down. This low here kind of recalibrated that, and then broke down. This low here, recalibrated, and then broke down. This low here, recalibrated, right? You broke down. Now it is looking, though, if you're kind of thinking that this is the end of the cycle, the long-term cycle going back like literally 30 years, right? Because it is going back 30 years, right? This is a monthly, right? That's 1994. Okay, this is like 1989. You know, you can really look at trace these rates back to, you know, back to time more or less like 1982. So 40 years of interest rates going down, and you can see the way in which they just hit a level and they come back, hit a level, come back, hit a level, come back, hit a level, come back. Now, maybe I'm wrong and they're going back here. You know, I don't think they're going down there. I think this could be the end of the party, and if it is, then that's the first stop and that's the next stop. If we look at gold, gold is doing, you know, I mean, this price action here is exactly what we've seen in the bonds, as I just showed you, where there's been this move and that move, right? And if we go back again, there's these triangles, they're kind of descending, and they even match up to, you know, the point where they go up, have a bit of a jump around, up, down, last gasp, and then a break, right? You know, and if we take that over here, I mean, you know, that is exactly what has gone on here, where it kind of went up, had a bit of a jump around, went up to a high, came down, had a last gasp, lower, had a break, and then it's all over, right? That is the same pattern, you know, from A to B, right? That's what happened. And if we actually go back and look at Bitcoin, I'm not a fan of Bitcoin, you know, whatsoever. But you can see here, it's the same thing, right? We had these like triangles, broke down. These triangles, this one even had that last gasp, broke down, right? Bitcoin, I actually think, is looking remarkably strong. Could be poised if it comes back to this line, right? That's like, you know, back to 13,000, right? So some people look at Bitcoin, they don't even look at it on a logarithmic scale, right? You know, that's linear, right? You got to look at it logarithmic, right? Because $1 on 55,000 is very different from $1 when it's like trading at like 60 cents, right? So you got to look at it on a logarithmic scale. So it is looking very interesting at the moment. As I said, I don't trade. I've got no interest in trading. The volatility is just ludicrous, right? But put it this way, if it does move down, there's no reason why it couldn't move quite a move down to there. Sure, it could go to here. What's that? That's 20,000. This is 13,000. I mean, there is massive thin air in there, right? Like so much of it. I mean, really, there's a little bit of a pause there, but in the grand scheme of things, there is so much gap to be filled. It is not funny. Look, that's it for the markets at the moment. As I said, the US market really is poised at quite a delicate juncture, and it failed to break that 44.20 like on Friday. That was a key rejection. I mean, that was really quite a very important rejection, because you can see all the work it did around here. Okay, when it broke through it, it really broke through it very strongly, right? When and you can see here when it broke through it, there's a high conviction sell straight through it. High conviction sell straight through it. High conviction sell straight through it, right? So when it's busted down through it every time, it's been a very high conviction trade going short through it. Going up, it's been tough work here, right? Going up here, well, it had a bit of support there. Here, it's a bit of tough work getting through it. So there's definitely a lot of selling interest around here. That when it's come through aggressively, and aggressively. The buying interest has found it tough, right? Has found it a little bit tough, there, okay, and has found it tough again. This one is a key level to watch. If it breaks that 44.27 convincingly, then if these guys kind of then chicken out, we could find quite a strong break. I'm still short, right? These equity markets, and still think that it's a risk-off situation. Look, that's it for today. As I said, these are for education, not for financial advice by any stretch of the imagination. So take care when you are trading these markets. There is a lot of risk involved. Make sure you get a good advisor. Okay, make sure that you don't just like roll the dice for for fun. People do lose their houses on this kind of stuff. So take care. Be careful who you listen to. There are a lot of shysters out there. And you want to make sure that you're listening to someone that's been in the markets for a long time and is not out there trying to sell you some get-rich-quick scheme. The only thing that I can really teach you, I hope, is that there is a 99% chance you will dust a lot of money trading these markets over the short term. Okay, so be extraordinarily careful, because they can and they will bite you. It's not some Wall Street conspiracy. These markets are volatile markets, and there is money at stake. So as I said, take care, and I hope these videos have been somewhat useful for you. All the best. Okay, ciao.